Welcome to Thoughts on the Market. I'm Adam Kramer from the Morgan Stanley U.S. Real Estate Research Team. Along with my colleagues bringing you a variety of perspectives, today I'll discuss a hot real estate topic, whether the surplus of vacant office space offers a logical solution to the national housing shortage. It's Wednesday, August 14th at 10 a.m. in New York. Sitting here in Morgan Stanley's office at 1585 Broadway, Times Square is bustling and New York seems to have recovered from COVID and then some. But the reality inside buildings is a little bit different. On the one hand, 14% of U.S. office space is sitting unused. Our analysis shows a permanent impairment in office demand of roughly 25% compared to pre-COVID. And on the other hand, we have a national housing shortage of up to 6 million units. So why not simply remove obsolete, lower quality office stock and replace it with much needed housing? On the surface, the idea of office to residential conversion sounds compelling. It could revitalize struggling downtown areas, creating a virtuous cycle that can lead to increased local tax revenue, foot traffic, retail demand, and tourism. But is it feasible? We think conversions faced at least 3 significant challenges. First are the economics of conversion. In order for conversions to make sense, we would need to see office rents decline or apartment rents rise materially, which is unlikely in the next 1 to 2 years given the supply dynamics, and office values and conversion costs would need to decline materially. Investors can acquire or develop a multifamily property at roughly $600 per square foot. Alternatively, they can acquire and convert an existing office building for a total cost of nearly $700 per square foot on average. The bottom line is that total conversion costs are higher than acquisition or ground-up development, with more complexity involved as well. The second big challenge is the quality of the buildings themselves. Numerous elements of the physical building impact conversion feasibility. For example, location relative to transit and amenities. Buildings in suboptimal locations are unlikely to be considered. Whether the office asset is vacant or not is also a factor. Office leases are typically longer duration, and a building needs to be close to or fully vacant for a full conversion. And lastly, physical attributes such as architecture, floor plate depth, window placement, among others. And finally, regulation presents a third major hurdle. Zoning and building code requirements differ from city to city and can add substantive time, cost, complexity, and limitations to any conversion project. That said, governments are in a unique position to encourage conversions, for example via tax incentives, and literally remake cities short on affordable housing but with excess underutilized office space. We have looked at conversion opportunities in 3 key markets: New York, San Francisco, and Washington, D.C. In Manhattan, active office to residential conversions have been concentrated in the financial district, and we think this trend will continue. We also see the east side of Manhattan as a uniquely untapped opportunity for future conversions given higher vacancy today. This would shift existing east side office tenants to other locations, boosting demand in higher quality office neighborhoods like Park Avenue and Grand Central. In San Francisco, we are concerned about other types of real estate properties beyond just office. Retail, multifamily, and lodging in the downtown area are taking longer to recover post-COVID, and we think this will limit conversions in the market. And finally, in Washington, D.C., we think conversion would work best for older, Class B or C office buildings on the edge of pre-existing residential areas. In these 3 markets, and others, conversions could work in specific instances with specific buildings in specific submarkets. But on a national basis, the economic and logistic challenges of wide-scale conversions make this an unlikely solution. Thanks for listening. If you enjoy the show, please leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.